Good morning, all. CamelbackTrading.org coming to you this Friday morning, March 31st, and we're looking at window traders market profile of the ES and the SPY. Last day of the quarter. It's been a good quarter for some, a non-event for others. The transports and the S&P up 5%. The Nasdaq's up 15%. The Dow and the Russell basically flat on the quarter. We'll see what kind of reaction we get to the PCE at 8:30 and how much more the bulls want to attempt to take. Bulls are certainly in control on the daily. Like I said on the weekly, I'd like to see them take out that week of March 6th high, and then the weekly would also be firmly up. That would be a really big feat going into the start of the second quarter. Three smallest ranges of the year, the last three trading days. And our volume has actually been very light also. Now, as far as the game plan this morning, again, in the pre-market, we have traded higher. ES and SPY both have gaps above them. The ES gap gets filled at 97.25. Okay? So far, our overnight high is around 94.25. So it's amazing how they got into the gap pre-market. Look. If the PCE number doesn't upset the apple cart, we're going to go get that, take that gap back, and probably get some more legs to the upside. If it's a number that raises more inflation fears, well, then maybe we don't get that gap and we back off and take out yesterday's low and come into balance. Again, yesterday's range was the smallest of the year. It will be very, very easy to take out both sides of it. So that's something we definitely have to be made aware of. NQ. Overnight got above yesterday's high, but now look where they are. They're firmly in the middle of yesterday's range. Again, they had a small range. Remember, NQ and SPY, the only ones that held gaps from the last 2 days. Okay, ES filled their gap yesterday to the tick. Righty doesn't have any. Righty, on the other hand, right now, also, remember, they had a trend day yesterday. Look where they've been trading overnight. Look where their wide pocket is, right in the middle of the two distributions. So game plans for this morning. Well, again, we know how they like front run the overnight high, which right now is right near that gap fill. So if this was to be the overnight high, any push towards that, I think that's a really good risk reward. Short against it, out if that gap above gets filled. That's a nice short play. As far as a long play, same thing against the overnight low. If they'd have come down. Now, at that point, value might be unchanged or overlapping to higher. Again, if you do take out the overnight low, though, nothing to yesterday's low. As small as the range was, right, there's nothing in there. We were only 7 wide. There's no wide POC. There's nothing to lean on. So they could easily get to yesterday's low. So I would not stay in the long if you start getting acceptance below the overnight low. Those are really, again, too early plays. You'd be getting all of this up to the minute. If you're in the trading room as a live webinar. The real line in the sand, if this market did take back a lot, is H's high from Wednesday, which is around the 40-50 level. That's your real line in the sand for bulls that they want to defend. I will be recapping all of these charts tonight, all the indices for the quarter. We'll go over them, and then just quickly, for SPY, here's the weekly. Now, again, a lot of people might call this up, and that's fine. But this is the one I want to take out because I would firmly call it up then, and we would firmly stop the lower high trend line that we have going this year. And the daily is up for now. If we take out yesterday's low, firmly back to balance. If we're able to get that other weekly high, this market will have some legs behind it, although you would like to get the longer-term participants helping out the bulls. Good luck trading today. Thanks for the likes and subscribing to this channel. And we'll recap the day and the week at 4 p.m.